Hello and welcome to Investors Hangout. This weekly interaction to help you learn and understand savings and investment issues is brought to you by Aditya Birla Sun Life Mutual Fund and Value Research. Here's wishing a very happy new year to each one of you. And today we'll be talking about something that we have never touched upon before, and that is how to find a good financial advisor for you. To talk about this, we have with us Dhirendra Kumar. Welcome, Dhirendra.
Thank you.
First of all, let's begin with how to gauge that if one needs a financial advisor or one is a do-it-yourself kind of an investor.
No, if you're a beginner investor, then you have to decide that whether you want to get it right first time, and if you're willing to understand, willing to learn, read a little bit, and form your own principles, then maybe you can get started on your own. Today in India, you have mechanism, you have facility, you have resources, whereby you can get started. It will be cheaper, it will be cost effective, and you can get going. But there are people, for whom the stakes will be very high. They may not have the time to learn. Assuming that, you're retiring and all your lifetime savings accumulated at one place. And now you have to work on an income plan for that. And you may just lack the confidence. You just need a second opinion, or you need to really get a plan, get a second opinion, because you need to get it right, because
the stakes are too high.
Stakes are too high and you can't afford to go wrong. Then the second is that, there are people who somehow think that, they cannot be financially savvy. There has to be an expert. He knows it best. He can't do it himself, though he may be, perfectly capable of learning everything, understanding the principle. And it is useful to actually have an advisor. I'll tell you why. Because most of the things you will learn, but the biggest reason which is an impediment, which holds people back, is the temperament. And you need a good mentor. So I think I would like to really equate an advisor with a mentor, who will prevent you from misbehaving almost always at the wrong time. Because there are two mistakes which people do in their course of their investing life, which is they get very excited at the wrong time about their investment. So they will be willing to borrow money to invest because the market is doing very well. And they get extremely pessimistic at the wrong time, when the market is down 40% and in a rush, and he will be all depressed. He will be saying that, okay, now I have to square up my losses, get out of the market forever, never turn back to market. Both of it is wrong. And that is why you need a mentor. And third thing is that, most of the time, preventing you from doing unnecessary things, because investing is not about doing a lot of things. Investing is all about not doing a lot of things. And if you get a good mentor, if you get a good advisor, he will prevent you from getting distracted, wasting money there.
What happens is there are a lot of distributors out there, a lot of sellers there. They tend to say that they are advisors and people, get fleeced by them. So how to find a trustworthy financial advisor, and is there a legal framework around it?
Yes, there is a legal framework. Not only there is a legal framework, it's a very fast evolving legal framework. When it comes to advisor, or there are two species in the regulatory framework, who are, one is the advisor and the other is a quasi-advisor, so to say. There is something called research analyst. They will be making these people, they are regulated, they get a license from SEBI to operate. They are validated, and there is a specified education for them, experience for them, or their background, and they're supposed to comply with a set of guideline at all times. And so the research analyst, he can make you recommendation. They could be narrow, they could be it could be specific. They can make recommendation. It will not be customized. Research analysts provide you recommendations or a specific advice, but it is not customized to your requirement. RIA, investment advisor, he is supposed to understand your needs, understand your needs comprehensively, do your risk assessment, because you can have a need, I can have a need, and our needs could be exactly the same. But your temperament could be different. And so customize the recommendation or a plan in line with the recommendation. So he's supposed to do the risk assessment. He's also supposed to do the KYC. And then give a plan which is very much in line. It will actually should be palatable to you. He must have evidence, or he should have gone through the whole process. So that if the regulators come and ask you, he should be able to demonstrate that all his recommendations were based on this framework. So there is a RIA. who is a regulated entity. He's an investment advisor, and then there's the research analyst. Then there are all kind of other intermediaries whom we perceive them as advisor, and they may not be advisors. Some of them may be good advisor, and some of them may be very bad advisor, or they might be misleading advisor. And so you have to exercise your caution. You should not be seeking advice from an intermediary. The list of intermediaries is there are stockbrokers, there are mutual fund distributors, there are PMS sellers, there are people who are hawking, there are wealth managers, but they are actually selling investments. And then there are insurance agents. And all these people are in the business of selling investment, and they don't charge you, they don't ask you for advisory fee, they get paid by the companies whose product they're selling. Right. And if you are able to figure this out, and there are good intermediaries, there are people who will be selling the right product, they will understand that. So the story is, the regulatory framework actually devises a mechanism that if there is an intermediary, then he cannot provide this advice. Any advice should be of a very generic nature, and it should be incidental to doing this. That should not be his mainstream. Likewise, all these research analysts and RIA, he should make money from this. His revenue should not be linked to investment. He should substantially not make money from selling investment. Right. And any transaction enablement that he will provide, that will be incidental to his main service. So you have to define that what is the main service. Main service is advice or selling investment. And that is something where you have to understand. A person who is selling advice might provide a bad advice. A person who is selling investment, he might be giving valuable advice incidental to the investment. So there is no straight law, there is no straight rule how to spot one. You have to exercise your diligence, take your reference, understand, ask some question.
So you say you find a potential advisor. What are the crucial questions that you must ask them to figure out that they are the best fit for you?
One is that how often they will communicate with you. What is their investment philosophy? And how often, what is the exact services that he provides? Will he be actually, if he's not there, who will take care of it? What will happen to your investment? Asking the very basic question.
And what is his earning model? How does
his earning model is that he should be in a position to tell you that he will charge you X amount of money irrespective of your scale. At some periodicity, you should look at him as a doctor whom you pay a fee for getting an advice.
So he knows your needs and
accordingly gives you a plan. And he is not an investment seller. Any investment that he's enabling you to buy is incidental to his main practice of giving you advice.
All right then. Before we end this episode, we have a viewer's question, which is somehow related to what we discussed today. So he says, Saurabh Sindhu has sent in this question, and he says that there are lots of investment going on in ULIPs and endowment plans. And there are many agents mis-selling the policies. So how should one really navigate through them and know what should one do?
I would like to, thank Saurabh for asking this question. And selling ULIP and selling endowment plan is not mis-selling. In fact, the fact that you are selling it is mis-selling. The whole deed of selling these as investment product is mis-selling. In 2005, we came up with a cover story that insurance is not investment. That was the first public statement on this product, because then we did not even have the term insurance, which it was far from becoming mainstream. Insurance companies barely had term insurance on their shelves, on the front shelves. When you mix insurance and investment, you get worst of both, and you get the inappropriate one. And I'll tell you why. Whether you go for ULIP or whether you go for endowment plan, all of it is insurance-linked investment. Endowment plan is worse because the return that you get, in lieu of the guaranteed return that you get in many of the endowment plans, the return gets dragged even lower, and it has no connection with the reality. And because of the assurance of return, the return you virtually get nothing. So it's very important for people to understand that what are you buying? Is it an investment? Is it an insurance? Because insurance should be looked upon as buying protection for your family. And When you don't need it, you don't need to pay for it. And when you badly need it, you should be paying for it. And paying a small amount and getting a large coverage at a young age is possible. And getting all these insurance-linked investment gets you nothing. It is a poor investment and it does not get you a meaningful insurance. So go for term insurance, because something happens to you, you will lose your house and your family will be left in the lurch. So it's a very crucial financial objective to get protection for your family. Investment comes after that, and go for it. These ULIPs and endowment plans will not fulfill any such needs.
All right, so steer clear of any of these ULIPs and endowment plans. That's the message for you, Saurabh. That's all we have for you in today's episode. Keep watching this space for more information. If you like the show, do subscribe to our YouTube channel, and wishing you a very happy new year once again. Take care. Bye for now.